Welcome to SST College of Arts and Commerce. I am Assistant Professor Deepika Valecha. In this video, we will be discussing about cash budget, which is a topic in second year banking and insurance class of semester 4. Now, we will be discussing today about cash budget introduction, its elements, basic principles of cash budget, and also one practical question based on it. So, let's discuss what is cash budget. Cash budget is the written estimate of a company's anticipated cash flow. It predicts the cash collections from the various sources, cash disbursements from the various purposes, and also resulting into the cash position for a future period on a monthly basis as a budget period progresses. As a result, it is a formal statement of company's planned cycle of the cash flow. Now, let's see this with the help of one example. In a company, on day-to-day basis, there are various activities involved in which cash is involved. Say for example, if I have to pay salary to someone, so that will be considered as a cash outflow. Some or the other amount will be paid to some person, so that will be the cash outflow. Likewise, there are n number of the expenses a company is doing on a daily basis. That may be including salaries, payment of the salaries, payment of the expenses, it may include the payment to the creditors and so on. And similarly, there is a situation where a company receives the cash on a daily basis, on a recurring basis. Say for example, if I receive the dividend from a company, if I made a sales to the customer, either it may be a cash sales or it may be a credit sales, I will be getting the amount from the customers in terms of sales. And in this way, so their daily inflow and the outflow of the cash is there in a company or any business concern. Now, for a company, it is very important to maintain the estimation of the cash, what is required to be or what will be the requirement of the cash in the coming period. Say for example, for the month of March, company can plan the cash estimation in the month of January or February so that they will not have the shortfall of the cash in the coming period. So it is very important to manage the cash with the help of cash budget. Company manager can do this. Now, what are the various elements of cash budget? Cash budget includes three important elements. Number one, we have forecast of cash inflows. It includes receipts from the cash sales, collections from the debtors if we made the sales on the credit to the customers, and it also includes the various small dividend or incomes which we receive from on the recurring basis. It may include interest received on the investments, profit on sale of a particular machinery or building or any fixed assets. These are some of the examples of cash inflows. In simple terms, cash inflows refers to whenever the cash comes into the business. Second, we have forecast of the cash outflow. We also require to make the forecast of the expected or else estimated expenditures in the coming period. Say for example, it may include the expenses of salaries, wages, office expenses, selling expenses, advertisement expenses, payments to creditors and so on. And finally, we have forecast of the cash balance. With the help of the cash inflows and outflows and with the help of the cash budget, we will be able to find out the exact amount, which is estimated amount of the cash which is required for a coming period. It may be monthly basis. Say for example, a manager can prepare the budget of the 6 months estimated budget so that the company can plan their cash requirements accordingly. Now, what are the basic objectives of the cash budget? It is very important to forecast the cash situation of the company in the future, to forecast if there will be a cash surplus or deficit in the next month. Say for example, if there is a deficit in the next month, so company is required to have an arrangement with the banks for the purpose of bank overdrafts, or it may choose any other options to help the cash requirement. To allow for the funding preparation ahead of time, the budget assists management in arranging the bank loans or trade credits or any short-term advances which are required. To assist in selection of an appropriate source of finance. See, if we make the cash budget in if we make the estimation prior, then we will be able to be in a position to identify how much amount we are supposed to raise, and also which source of finance will be helpful for us. This kind of a planning we can do very prior than that of the requirement. To allow the proper use of the ideal funds. Now, if I have the forecasted amount with me, accordingly I can plan if I do have the idle money with me, so how I can use that idle funds for the purpose of managing my cash requirements. And also to keep the tabs on the cash expenditures by restricting the amount of money spent on by the various departments. So with the help of cash budget, we can also have a track on the record of how much is the expenditure which is incurred by each and every department, so that we can also have the cost allocations for the various departments. Now, we have seen the principal objectives of the cash budget. We have seen the elements of the cash budget. I hope you have understood the cash budget nicely. Now I will be continuing with the practical problem for the same, how exactly we can prepare the cash budget. Now, see, in a question we have the data about the various months. The data is given for 4 months, that is December, January, February and March, and the various activities which include sales, purchases, wages and expenses is given for every month. We have the question like prepare the cash budget for January to March 2019. That is, we are supposed to make the estimation for 3 months, that is January, February and March. Now, further adjustments are given here. Number 1, we have 25% of the sales are on cash basis and debtors are allowed 1 month credit. Now, as I read this particular adjustment, from this I can come to I came to know about like this adjustment is related to the sales. Number 2, 1 month credit is available by the creditors. This is related to purchases. Number 3, all the expenses are paid in the same month. Again, this adjustment is related to the expenses, that is wages is also an expense for a company. So wages and expenses both are related with adjustment number 3. And finally, we have opening cash balance for the month of January, which is 7 lakhs, which is given in the question. Now, from this information, how we can prepare the cash budget? First, we need to calculate like how much will be the amount of sales for a particular month and purchases, and then we can finally go to the cash budget format. So let's see the working note for the same. Now, number 1, how you are going to present that? First of all, you have to make a schedule which includes particulars and the data which is given for 4 different months, that is December, January, February and March. First of all, we have sales. The sales amount which is for every month which is mentioned, I have written on the sales values. Now, as you can see in the first adjustment, what was written? 25% of the cash sales are on the cash basis. Now, what do you mean by cash basis? Cash basis refers to what? that the amount you are going to get in the same month only on the same day. That means 1,50,000 is a sales for the month of December, is it? Now from that 1,50,000, 25% I received in the month of December only, and the remaining amount, that is 75%, is I am going to get in the next month. Now how I came to know about like that will be in the next month? Because it is mentioned in the first adjustment only that the debtors are allowed 1 month credit. Now to whom you are going to give the 1 month credit? To the people to whom you sold the goods on the credit basis, is it? Now those are the people who are termed as debtors. So here in this, what will be the adjustment? Now as you can see in the table, I have bifurcated the sales in two categories. Number one is cash sales and number two is credit sales. Cash sales is 25%, which I am going to receive in the same month, is it? So 1,50,000 into 25%, that will be 37,500, and simultaneously I have calculated the values for the next month, that is for January, February and March. Now I have calculated the values, that is the remaining amount, which is of 75%. So 1,50,000 ka 75%, that will be 1,12,500, that I have written. Now that this 1,12,500 I am not going to get in the December month, I am going to get in the next month, because debtors are given the credit duration of 1 month. So as you can see that 1,12,500 I am going to get in the month of January. So that I have written as collection from debtors, that is collection from debtors, which is 1 month credit, that is 1,12,500 in the month of January. Simultaneously for the January month, what was the credit amount, credit sales amount, which is 1,18,500, which I have received in the month of February, and for all months we have to do accordingly. Now I got the two values, that is number one, which is cash sales, and number two, which is collection from debtors. These two will be considered as the inflow. So I am supposed to write this in cash inflow section or receipt section. Now coming to the next, we have next item, which is purchases. You have the information of purchases like for 4 months you have. Now if you can see the adjustment, what is written? 1 month credit is available by the creditors. So simply whatever I have purchased in the month of December, I have to make the payment in the month of January. Simultaneously, similarly, whatever 80,000 purchases I have made in the month of January, so that I am supposed to pay in the month of February. So you can see in this particular schedule, I have written purchases, which is 1,40,000 for December month. That payment to creditor, that will be 140 in the month of January. So this is payment, that will be considered as cash outflow or payments. Now the next part of the schedule is wages and expenses, that is related to the adjustment number 3. So here you have all the expenses are paid in the same month. So here simply 15,000 is of wages, that for January we are supposed to pay in January only. For February, same amount we are going to pay in the February. So there is no as such adjustment for the same. Now you can see the same expenditures of the each and every month are written in the schedule. Now we have to focus mainly on the duration for which we are supposed to prepare the budget. Now in the question it was clearly mentioned, prepare the budget of 3 months starting from January. So when we go to the final format of the budget, we have to prepare the columns accordingly. First column will be the particulars column, and then 3 columns, that is for January, February and March. Now first I will explain you what is the format is all about. On the first line you can see we have opening cash balance, as on the first day of every month we have some or the other amount with us as considered to be the opening balance. Then we have the main heading, subheading, which is receipts. Then we have total of all those receipts. We have payments, then total of payments. Then finally, how I am going to get the closing balance? It is written as we have to add opening balance with that of the receipts, and whatever payments we have done, we have to subtract that payment from it. So opening balance plus receipts minus payments. So this is all about my format. Now in the question, the opening balance of the January was given, which is 7 lakhs. So I have simply written the opening balance of January, that is 7 lakhs. Now from the working note, we are supposed to just take the values for January, February and March here. Number 1, we have cash sales. For January, we have the cash sales of 39,500. For February, we have 72,500, and for March, 92,250. So accordingly, I have written the values of cash sales here. Then number 2, we have collection from debtors. The same values which I have calculated in the working note, collection from debtors, I have to record the values for January, February and March. Now these are both the values of the receipts. If we come to the payments, we have payments to the creditors. So I am supposed to write payment to the creditors, wages and payment of expenses in the payment section. So I have written all the payments here. I have written all the receipts. Now what I am supposed to do? I have to add the receipts. So we have added cash sales and collection from debtors, which is 1,52,000. Then we have made the total of payments, which is 1,62,400. Now finally, I just need to apply the formula. What is the formula? Opening, that is 7 lakhs, plus 1,52,000 minus 1,62,400. If you can see, I have added opening balance plus the total of A minus the total of B. So I got the closing balance for the month of January, which is 6,89,600. Now as a basic rule of accounting, we know that very well. Closing balance of the month will be the opening for the next month. So this 6,89,600 will be the opening for the February month, and accordingly I have to calculate in the similar manner. I need to calculate the closing balance for the month of February, and that closing will be the opening for the next month, that is March. So in this simple manner, I can calculate what is my cash requirement for each and every month. So I hope you understood this particular practical question of the cash budget, and also why the cash budget is required to be prepared for the purpose of smooth flow of the cash for the day-to-day operations. Thank you so much. Thank you.